All right, and this meeting is being recorded. Hi, today is April 16th, 2020. It's about 1:30 p.m. Pacific time, and the markets just closed about half an hour ago. So I think that the big news that we should all be understanding, because there's a whole lot of information out there that is very, very misleading, is that we are in a recession. And the economists have known that we were in a recession for over a month. If you're only getting the information now, then it's important that you get the information now so that you can start moving in a different way to protect yourself, both protect your wealth as well as to protect your home and your budget. So I'm going to give you some data, statistics, information. I'm going to do some screen shares so that you can see it. And then I'm going to refer you where you can get additional information and also what you can do to protect your wealth, to preserve your home, to make sure that your budgets are okay, because we certainly have a lot of people that are in trouble, are filing for unemployment claims. So let's get to the statistics. So we are in a recession. There is no doubt. The only question is, when will we emerge? Now, in early March, when people were pretty sure we were in a recession, and it was more based, this was before the stay-at-home orders, it was more based on supply chain disruptions. Now it's more based on that and unemployment and shops being shut down and no consumption, or except for basic needs. So in the early days, they were hoping for what is called a V-shaped recovery, that we would have tough times for a couple of quarters, and that's technically a recession. And then we would all be able to come out of our quarantine and we would start spending again, and life would go on pretty much the same way it did before this pandemic, and everything would return to normal. The premise of that was faulty from the beginning. And we're going to talk about why that's the case. And it's not just due to the pandemic. So we're in a recession today. Corporations buybacks are being absolutely furloughed. So this is a big deal because the entire stock market since the Great Recession has largely been built upon corporations borrowing money very cheaply and using that money to buy back their own stock. Now, on March 15th, when the Federal Reserve Board had their emergency meeting, the liquidity for the corporations to be able to do this had dried up. So that's why we had the emergency meeting. It was a few days before it was supposed to be scheduled. And they immediately, they slashed rates to zero, and they immediately began infusing the markets with liquidity, buying back mortgage-backed securities, buying back treasury bills. Even treasury bills, the liquidity had dried up. So again, this was before the first stay-at-home order in the US, which was issued on March 17th. So that was on March 15th. So it was even before everybody started to be quarantined. We had to rescue bonds, treasury bills, and mortgage-backed securities. This bodes very poorly for life insurance companies and for annuity providers as well. So buybacks now are not happening for the most part, because the corporations that are seeking the bailouts, that's one of the conditions that many of them are agreeing to, is that they will not use that emergency funding to line the pockets of the wealthiest within the corporation at the expense of their employees and at the expense of our economy, which can happen. We saw it happen a lot in the Great Recession, where corporations were taking bailout money and they were rewarding their insiders, and they were buying back their own stock, and they were issuing dividends. Also, dividends are going. So the airlines in their bailout package promised that they would do no bailout, no corporate buybacks, no share buybacks, and no dividends until the loans were fully repaid. Ford just announced on the 14th, 2 days ago, that they will no longer pay a dividend as well. And even more sad and distressing, but not surprising, sadly, is that they said they only have enough liquidity to get them through the third quarter. Now, what that means is that if you have Ford bonds, and many people were still buying Ford bonds, even they were downgraded to junk on September of 2019. Many people were still buying Ford bonds and 30-year bonds. So those are in trouble. If you have bond funds, those are problematic. And in fact, that's why I think it's so important to have these regular video conferences, because I am hearing, sadly, from so many of you, the level of miscommunication that you're receiving. And the sad truth is that if someone is calling you and telling you that now's a great time to buy something, they're a salesman. So I want you to get the facts. It's not sell everything. That is not the right strategy either. The right strategy is to have the appropriate amount at risk, to have the appropriate amount safe, to be diversified, to annually rebalance, which is a buy low, sell high plan on autopilot, to not be over leveraged on your budget or your home, and to get 21st century strategies now if you are. And do not get your strategies from the bank or the debt collector, because their strategy is going to be making them rich at your own expense. You might be sinking your own lifeboat. So be careful, because even bloggers, even media, financial news, a lot of times they are incentivized by the people who pay their bills to, make things different or highlight things that they shouldn't necessarily, are not the real truth. Okay, so the mortgages, mortgage-backed securities, bonds, money market funds, and treasury bills all had to be rescued on March 15th. So even though the most recent beige book is highlighting how travel and leisure and hospitality and retail, other than basic needs, are all under attack in this current situation that we're in, the financial services industry was the first one to be bailed out. And that happened on March 15th, before any stay-at-home order in the US was issued. I think this is really important to remember, because if you have money market funds, if you have bonds, if you have mortgage-backed securities, if you have bond funds, then you now know why they are going down. And your salesman has probably told you, hey, bonds usually go up in recessions, and that's usually the case. It's not the case this time, and there are reasons for that. And in the blog that I just posted today, there's a link to my bond blog, which if you have bonds, you should read. Okay, so real estate is also down. So the high in real estate in the US was June of 2019. It's down about 5% since that time. So it's important for you to realize, but it's also important to realize that we still have unaffordability issues in the United States. So it had been a few months ago as high as 74%. It's now about 66%. And I'll show you the affordability map in just a moment. Okay, so we're going to have some pretty bad news April 29th. That's when the first quarter GDP report will be issued. It's at 8:30 a.m. Eastern. That's the first official notice we'll get that we are headed into a recession. They can't claim that we're in a recession until we have 2 quarters of contraction. So that doesn't happen until the end of July. I believe it's July 27th, but if you want to get the exact date, go to my calendar. Go to nataliepace.com and just click on calendar, and you can see the exact date of the July GDP. And that's the advance notice of the second quarter. That is when we will officially be declared to be in a recession. And that one's expected to be just catastrophically bad. Now, again, back to, are we going to have a V-shaped recession? Very unlikely. Most, like the IMF and the economists, the people behind the scenes that are trying to get us through this are all saying, hopefully, we'll start to recover by 2021. So it's a very good idea not to have short-term fixes in our wealth strategy, but to have, to adjust quickly to the new reality and to embrace our family and find solutions that are intergenerational to preserve our wealth, to make sure that you're the boss of your money and that you know what you own and why you own it, and you know how much risk you're taking on and whether or not that's a good idea. Okay, so solutions, and then I'm going to give you a bit more data and statistics and then a few charts. So solutions, come to the retreat this weekend. It's on Zoom. As you can see from this video conference, it feels like it's just you and I, because that's the way Zoom is structured. So it's going to be very intimate. It's hands-on. So about roughly half of the time, you're actually implementing the strategies I'm telling you about. So you're learning how to do it yourself. And that's important because you need to know the ABCs of money that we all should have received in high school. And you need to adopt a time-proven 21st century investing strategy now that preserves your wealth. So again, the strategies that I developed in 1999 earned gains in the last 2 recessions and have outperformed the bull markets in between, and they are easy as a pie chart. So it's not more time, it's not more money, it's not complicated, it's not day trading. You set it up right, you rebalance it 1 to 3 times a year. 1 time a year is fine, 3 times a year is fine, not more, not less. And if you have a lot of things at risk, or if you want to know what your risk exposure is, then get a second opinion from me. Just call our office or email us and we'll give you the information on how you can get that done. info@nataliepace.com or 310-430-2397. So other dates to keep in mind are that the Federal Reserve will issue their next, press conference and their next press release at the end of their meeting. And that'll be on April 29th as well. So we'll get the GDP report that's going to be not good. And it will be a contraction, 8:30 a.m. Eastern. And then we'll get the Federal Reserve response to that at usually about 2 p.m. Eastern. So before the markets close. Then on April 30th, we're going to get Apple's GDP report. They are in an unusual move for them. Usually they issue it right after the markets close, but they're going to issue it at 2 p.m. Pacific, which happens to be 5 p.m. Eastern. Nobody is going to be gone. I guess sometimes they'll do things like that thinking, oh, well, people have gone home for the day or whatever, but nobody will have gone home for the day. So that will be immediate headlines, and it's not predicted to be very good because they first started out with a supply chain disruption. The factory closed down in China, and then they had all their retail stores closed. And I will say this, kudos, because Apple was one of the first companies to close their retail stores. It's hard on the company to do that. Obviously, it's hard on the employees, but it seemed pretty important to contain the spread of the virus. And, hopefully this is actually shortening the amount of time that we have to go through what we're going through. Okay, so let me show you some information, some data, some statistics. I'll show you also how to get additional information. I want to remind you that these 2 books should be something that you have. I don't know if they look backwards to you. I'm sorry, they look backwards to me. The ABCs of Money and the ABCs of Money for College. This one, ABCs of Money for College, came out at the end of 2019. This one was just published a few weeks ago. Get the links on the homepage at nataliepace.com. They are updated. The ABCs of Money is updated to include coronavirus information. And it also is interesting because you'll see just how much information was already available in March. So this is not news to other people. If you're getting news that you should be buying on the bounce, or the markets had dropped to an all-time low, and if you sell now, you're selling low, or if you should be buying low, you're not getting real information. None of that is true. It is true that it was at maybe, a low, a 3-year low, but the last 2 recessions, most people lost more than half. So the idea that you were buying low or selling low, Not true, because if this recession is bad as the last two, then you're actually have at least half and maybe a lot more than that at risk. So getting safe, protected, hot, and diversified now is a very good idea. And the markets have recovered a little bit. The low is about minus 35%. It's about minus 20% right now. All right, so let me share the screen and show you a few other data statistic points that you need. Okay, so one of the first things that I want to share with you is, again, if you go and click on these links, it'll take you right to the books, the third edition of the ABCs of Money or the ABCs of Money for College. If you're a parent, then you want the ABCs of Money for College now, even if your children are 5. If they're tweens or teens, you absolutely want it. If you have college students, you want it. And if you are considering an advanced degree, you want to read it. The ABCs of Money, third edition, it should be taught in school. It's not, so it's the ABCs of Money that we all should have received in high school. If you're homeschooling, it's a good thing for your kids to read. And by the way, they'll learn how to trade stocks, which will be kind of fun for them. You can actually have stock competitions with them. It could be in a fictitious portfolio. It could be fun. So here's the blog that I just posted that I strongly recommend you read. We are in a recession. There's no economist I know that thinks that this is even a question mark. It hasn't been a question mark for over a month. Lots of links. So you can go to the beige book. You're going to get links back to when the feds did their original rescue of the banking system. You'll get links to blogs that have been posted, the bond article that I told you about, warnings from many high profile people about us being stocks and bonds being in a bubble, the asset bubbles that were in place before we had this issue come up, and that unaffordability chart that I was telling you about. So as you can see, the red areas and the orange areas are all areas of the United States where real estate is still unaffordable. Yeah, so I think the most important thing here to remember is that wisdom is the cure. You want to get your information from trusted sources. You have to be careful right now because bloggers, they could have started their blog yesterday, even if they're on a high profile platform like Motley Fool or Seeking Alpha. A lot of these allow various even CNBC, they will allow bloggers on their platform. You can't necessarily even trust the financial news because they can't really report on something until it happens. So again, data and statistic are showing us what is happening before it can be declared that it happened. So that's why I like data and statistics. A lot of people ask me, well, what do you read, Natalie? Do you read Wall Street Journal? Do you watch CNBC? I read data and statistics. They tell me all the stories I need to know, and they are a crystal ball into what's happening right now, which is going to be declared that it happened in the future. It's better to have that crystal ball with the data and the statistics. And I am doing my best to keep you updated on it as well, and to answer your questions. So remember that before these video conferences, you are welcome to send in a question to us at info@nataliepace.com. One last thing is that our new server sends out our mass emails from an email address that we do not monitor. So do not just hit reply. You still have to always be going to info@nataliepace.com. So again, whether you're interested in a second opinion or attending the retreat this weekend, of course, reach out to us and get registered right away. It's the most affordable retreat that we've ever hosted. And if you want to bring a family member, that is at an obscenely low price. It's really affordable because we want to empower all of your family. So either, email info@nataliepace.com, nataliepace.com, or phone 310-430-2397. Also, if you want to read the books and do it yourself, great. Go ahead and just go to nataliepace.com and click on the book covers. There's even free web apps there that can help you to personalize your own pie chart. So again, thank you for joining me. I look forward to those of you that I will see this weekend in our retreat. I'm happy to do second opinions. And again, the web apps are free. The book isn't free, but it's almost free. I think the Kindle editions are $3.50. So they're not going to break your budget, and they could save your assets, and they will definitely beautify your bottom line. Join us this weekend. I look forward to seeing you. And again, I'm going to be hosting these video conferences at least twice a month. And you can always revisit them at my YouTube channel. So be sure that you're subscribed there. It's simply youtube.com/Natalie Pace 2, the number 2. So Natalie Pace 2 on youtube.com. Thanks again. I look forward to speaking to you guys soon.